Good morning. Just about ready. So I don't know if you read the post I sent out last night, but when I was writing that, and I sent out the video that we made in the room at the end of the day with those comments, the Dow was down like 300 points. NASDAQ futures were down 90, and now we've got this bounce that started whatever time, I guess. Yeah. I guess it was around the time, it was right after I wrote that, actually, looks like. And it started to stabilize. So we do have some stabilization and a retest here on the 60-minute chart, which says, hey, we are eligible for day trades at this time. We cannot assume that a drop like this, a vertical drop, is going to go back up to the highs here. And as we always do, right? This is a wide range bar of mega proportions. And I did look last night, through different formulas that I could set up on TC2000, bars of that size. And you got to go back here for that to find bars of about 4%. There was almost 4.5% size bars. So, at this level, the bars are bigger, but still 4%, 4.5%. So we've got this big bar, and this area of support, it's that area now, but it came straight down. Our internals are there. They've reached extremes. I'm hopeful that this morning that, whatever sell-off will probably happen here to do some kind of retest, that the idiots step up big time with buying more puts. But as far as day trades go, I think that we're going to take a position here and with a pretty sizable stop. I don't see any other way to do it, with a small position size, looking to take advantage of a bounce into the next couple of days and just see what's going to happen here. All right. So let me go back to the 60 and go through these others. So there's the NASDAQ, the S&Ps. Last night it certainly looked like, that bottoming tail bar was a red bar last night, cutting through the 200. So looking at that, I said, well, assuming a market open where it was looking like that, this level down here in the futures should have been the next stopping point. But now we've got this retracement. And while we're going to look for this to continue a bounce, that does make sense. It is very possible. Well, let me back up here. We look at these scenarios the same way, regardless of how big the bar is, how it happened. So a bearish wide range bar, any retracement, we look for it to roughly stay in the, I can grab that, roughly stay in the halfway mark. Now, what is the halfway mark related to anything on the bar? Well, right here, there's where it continued the breakdown, 28.20 to 28.40. So I guess eyeballing it thereabouts. And so we can look inside the bar and then we see. And so that's about right. That's where we would look for a bounce to be reasonable and not put this break in question. So the further it might retrace up, the more questionable it would be as to whether any move to the downside is likely versus just maybe a retest of this low point. So I like the intraday pattern. We got a void let's see how this shapes up. So we'll see what the spiders look like, when they open up, and a retest would be ideal, or some sideways price action. Let's see. I have to believe that, you've got people that are just dying to get out of this market here based on what happened yesterday. So Q's down on the 200 and 170, 131. They're down here. So I think any kind of, my thoughts, and we'll see how it acts. I'm thinking, just here's this pattern. What would I wish for today for something to happen to give me a long bias? A gap down. Right? So if we go and look at last February-ish, right? And we had this big down bar. That gap down, I can't go back intraday that far, but that gap down was pretty big, right, percentage-wise compared to this one. This one not going to be so big. I wish it was 170. All right, so it appears to me, and I look at this pattern, like a gap down is a no-brainer buy. So now let's apply to that bias how the patterns are going to form here at the open, and we are going to have to, share size and give it enough room for some crazy wiggle. But this kind of a pattern is one in which we should see a bounce. And the Russell, right, bouncing here a little bit, crushed, and maybe a breakdown bar failure. Or is it a continuation down here? It's going to take a little while, a couple of days probably. Transports, they were also down over 4% yesterday. And from the high, well, how much is it from the high? And it's already down about 9% from the high. So these are big corrections in a very short amount of time. So it's going to take some time to repair the damage here. So just keep it in mind. So any longs, you shouldn't get excited to think like, okay, this is going to be some monster move, because it doesn't make sense to think that, but we can have some nice day trading moves. Bonds bouncing here a little bit, based on interest rates pulling in a little, prices going down. Market probably sees that as a little relief. Oil sold off yesterday. A lot of the things that happened yesterday suggested an economy that is maybe not as robust as it's being promoted to be. And if you heard our president speaking about the Fed, whether it was last night or was replay yesterday, I don't know. But, basically he was saying, what are they doing over there? Are they crazy? Like, they don't know what they're doing. Raising these interest rates, it's not necessary. So it's like, we have a president here telling basically signals to the Fed, stop what you're doing. And I doubt very much they're going to, but, as numbers come out, they'll make their adjustments. But, the market's in this tailspin because of interest rates. And hey, if those long-term interest rates stay up where they are and short-term interest rates are stable, that's okay. Right? Doesn't have to keep widening. The crude oil chopping around here. Gold, figures should be going up a bit here, because with what the president is saying, telling the Fed, what are you doing here? That should relate to gold finding buyers, because if the Fed isn't going to raise interest rates now, we all thought they would, if they're backing off from that stance, that's a legitimate concern of inflation and would support gold going higher. So maybe it's time to consider gold. We'll take a look. And, there was a lot of damage done yesterday, no doubt. Home builders just crushed. The retailers actually sliced through their 200-day. Where are you? Technology. Well, somewhat sliced. kind of like a little butter knife slice, I guess. And, you know, internet broke through this big top. So that, you know, that's a lot of damage done there. You know, biotech, big time move in a short amount of time into the 200. You know, retailing showed a little relative strength only by not being down as much percentage wise as some others, but it had already started to move down. Semiconductors, you know, it's just, you know, the bodies are everywhere. And, you know, pharmaceuticals, which had been doing great, aerospace and defense, which has been doing great. So everything was getting sold. And so now we'll just see how things begin to shape up throughout the trading day and find our spots for which should provide short-term longs. And then at some point we have to decide, you know, get out of the way here because, you know, probably going lower. Amazon is stable here. Why does that show down 14? I guess because it gapped down and it's recovering from the gap. Yeah. So not everything is, you know, things are bouncing here a little bit. So good that we're starting off on a negative note, and we'll see where this goes. So, all yours, Dan.
All right. Good morning, everyone. Yeah, I mean, you say we're starting off on a negative note. Yeah, I mean, we're still gapping down a little bit, but what an incredible bounce off the lows. And I was excited when I saw the futures last night and this morning that they were down the same 300 points, because then that's guaranteed to spike the internals even more, breadth and sentiment even more. And then I told you my scenario yesterday. If we saw buying the first 5 minutes, first 10, first 15, no tail, you know, just buying right out of the gate, then that would have been our entry. 5, 10, 15, 30-minute high, just keeps scaling in. And both long stock and short expensive puts. So now, since we've recovered so much, it makes it harder. So look, we're still in a downtrend. This was a gap and snap pre-market 15-minute, but now momentum has slowed. You got an unfilled gap. So I use my pre-market chart in the morning very aggressively. So if this can set up a higher low in the first 30 minutes, that would be nice, or sideways. So I don't know. So my game plan is not as clear now as it would have been if we had that nasty gap down. So we don't have many open positions. We still have a Walmart put spread that expires tomorrow. That looks fine. A PGR, we have a call spread that looks good. Orly call spread, that looks good. Intel, not looking good. We only have a 1/3 position though. MJ, these marijuana stocks are getting hit a little bit this morning after this afternoon's strength, so that's not good. We have a put spread on MJ. And Moss, we have a put spread, and that's it. Those are our only positions. And this one, it's way out of the money, and even with this sell-off, our stop is here, so we're still in it, and the midpoint to close is 9 cents. So we still have a profit. So that's, you know, that one's fine. Let's look at a couple other miscellaneous things. GE, we're just, you know, this is one we're just going to watch, and I would love for it to take a few weeks to set up. NIO, we were watching, I was yesterday, the Chinese electric car maker. CAH, ooh, that had an ugly slam down. So I'm not interested in that anymore. CME shows it green pre-market. I can't tell how real that is because there's not good volume. But what, let me ask you all a question. PYX? No, I don't have PYX. Oh, no, Lita, we never got filled. But that one looks fantastic. That one looks great. No, I remember this day. I was trying to get my, well, did you get filled at 40 cents? Because that's what we were trying to get filled at. NTNX. No, I don't remember this one. Was this a, this was a call spread. Yeah, how did I? Why isn't this one in my open spread trade sheet? Let me look. Because I said it. Here's why. Because I do remember that pattern. Here's what happened on that one, Lita. When it gapped down this day, I tightened the stop over this pivot and like 20 cents over this pivot with this bearish gap down. I thought we were off to the races. And I remember saying, you know, I can't be a Monday morning, well, that's not the right word. I can't give I can't post an adjustment, have people rely on it, and then go back and change it and say, oh, I was just kidding. So I closed it out. We made 15 cents is all. But I do remember saying in the room here, if you're still in it, it looks fine. And I think I said at the time, move your stop to the high or whatever I said, I don't remember. So if you're still in it, it looks fine. Both of those, to answer your question. So that's a long answer to both of those look fine. All righty. So that's it. Those are our opens. Let's see what's going on here in this list. So diamonds a little bit weaker, right? Because in turn versus spiders. Now the diamonds. Tell me what analyze this 15-minute chart versus spiders. I like the spiders better because this acceleration sell-off is more extended than this one. Well, not, it's gradual. Qs, no, that's still a nasty downtrend. IWM, yeah, so I will not be coming out slinging here this morning, that's for darn sure. Let's look at some fangs. Apple. Yeah, what a disappointment. You know, we were in it and here. Now it's a breakout failure, M top on the weekly. And that's what I remember. Amazon, this is exactly what I said when I said, if you did anything, and you never got a reversal, so you wouldn't have. I said short term. This is a perfect example of multiple time frames not being in alignment, right? We had a breakout failure, deep retracement under the 2050, engulfing M top. You're swimming upstream on that. Tesla, nothing. Facebook, whoop, that's Ford. Yeah, I remember asking Greg about shorting this thing. on that 2-bar reversal there on the weekly. Facebook looks horrible. Remember I said it looked like a magnet to the 150s? Now, based on that close, wow, that's ugly. I mean, there, you know, you see these tails here, support, there's some overlapping dojis. But if this were to go sideways for a while and not bounce, then here's your next minor support. And, you know, it can fall another 15 bucks. Netflix, I got shellacked yesterday, another breakout failure on the daily. And that's one that we got stopped on. We had a directional covered call and a put spread, and